Welcome to Investors Insights. Our topic today, pullback or bubble, question mark. We're asking that question because we got market volatility. Clients are concerned. We want to keep you informed through this blog. We're going to address that. I'm thrilled after the conversation I had this morning. I was amazed with all the data that Ty Miller and Bobby Norman brought to the table. And I really appreciate what you guys did in the debate and discussion we had this morning about the current market situation. Also, Bobby, I'm going to brag on you. In last week's blog, you talked about that historically pullbacks are just normal. We will have those. I have had pullbacks for many, many years. And so we're going to debate this morning, are we in a pullback or a bubble? It also confirms why you as our viewers should watch our vlogs, or if you want to go back and see what Bobby said in last week's vlog in conjunction with what he's saying this week. So Bobby, share the data you shared with me this morning about pullbacks and how the market looks, the economy currently looks, and all this volatility that's going on.
Yeah, so a lot to cover today. So obviously with volatility spiking last week and the market pulling back on recession fears, we want to share two charts that cover some client questions that we have received over the past few days. The first concern is around valuations for technology companies. As we saw one of the larger tech companies' stock experience the largest one-day drawdown in its history, which has led to some concerns around comparisons to the tech bubble peak that we saw in 2000 during the dot-com bust there. And so you can see in this first chart that on the left, it shows the PE or price to earnings ratio that measures a company's stock price to its per share earnings of the 50 largest companies in the S&P 500 in the year 2000. The PE in March of 2000 averaged 45.3, which is by historical standards show that the market was significantly overvalued. You can see on the right-hand side of the chart that looking at June of this year, the average PE is 24.8, which is obviously a lot lower than it was in March of 2000. So based on valuations, this is not a tech bubble or a dot-com situation. Yes, the market has a higher PE and valuation compared to historical standards, but not at the panic levels like we've seen before. The second chart I want to cover is around corporate dividend payouts and stock buybacks. So obviously with consumer spending starting to slow a little bit, we have had questions about the health of corporate America. And so while companies have a number of ways in which to return capital to shareholders, cash dividends and stock buybacks have been increasingly popular methods corporations have utilized in recent years. It's also a way for us to confirm that corporate America is healthy. And as you can see in the left of the chart here, companies that comprise the S&P 500 distributed a record $593 billion in dividends over the trailing 12-month period ending in March of this year. On the right side of that chart, you can see that stock buybacks totaled $816.5 billion over the trailing 12-month period ending in March. So dividend payouts and stock buybacks are a great way to confirm that corporate America is healthy. So we're not seeing the significant valuation concerns seen in the tech bubble of 2000, as also was shown with dividends and stock buybacks. Corporate America is healthy. We're obviously carefully analyzing the spike in volatility and market pullbacks around the globe. But as it stands today, the Atlanta GDP now estimate is 2.5% for the third quarter. That's strong. S&P 500 earnings for the second quarter are growing and are up 11% year over year. So again, this is positive news in what seems like a cycle of a lot of negative news hitting at the same time. So yes, we are watching it and we're analyzing everything we're seeing.
Yeah, and Bobby, you said it well, but there's a lot of emotion out there, and we like to focus on the facts. That's what we do here at Five Plan Partners. So talking about healthy corporate America, somewhere, sometime that will get recognized. So thank you for the way you went through all that. I thought you did a fantastic job. And also we had a conversation this morning about we're in the month of August. In August, Europe pretty much just takes off. A lot of the countries people have off for the whole month. That said, too, here in the United States, it's right before we start back to school. and people are getting that last minute vacation in, economies slow down. But one thing that really rattled the market was some jobs reports. And Ty, you talked about that. And it's one thing to look at the numbers; it's another thing to look at the timing of those numbers. So take us through that.
Yeah. So if you go back to Wednesday, to start, the Fed announced that they weren't going to cut rates, that, they kind of had some dialogue that September, was possible. They're still going to look at the data. But they didn't do a rate cut this time around, and their next meeting is in September around the 18th. And so, that was initially received really well by the market. If you remember Wednesday, there was a big pop that was received really well. And then Friday came, and on Friday we got a payroll number that was pretty weak. We got 114,000 on our non-farm payroll number. That's the expectations were 175, and so. Again, and then also there was a revision of 29,000. So the number was 114,000. The expectation was 175,000, but also May and June were revised down to 29,000. So that, the net gain, including revisions, only 85,000. And so again, expectation of 175,000, you can tell that that's a pretty weak number. The unemployment rate increased to 4.3. Just a few months ago, we were still in 3.9. So, the unemployment rate has steadily kind of risen here. And so now it's received that what the Fed did on Wednesday, they should have cut, is kind of the reception of the market, that maybe the Fed's too late. And then, looking into September, they're talking about, instead of maybe just doing a 25 basis point rate cut, maybe having a 50 basis point rate cut. Now, we don't, necessarily subscribe to that belief. A lot of data is going to happen in the next month and a half. But with that being said, expectations and kind of perception is now that the Fed is a little late, and they might have to move this process along a little faster of rate cutting. And as we've discussed multiple times, sometimes the market does pretty well in between the last rate hike and the first rate cut. And then after that first rate cut, kind of a different adjustment there for a short period of time. With that being said, this isn't something like 2008 where you have one sector, bubbling up and going to blow up or anything like that. Like on the surface, everything looks to be, fairly how it should be. Of course, we're leading into an election year. We're getting kind of, September is historically a little weaker. And so there's a lot of things that are kind of building up here into a possible rate cut scenario for the Fed. And so we'll keep our eye out for the next couple of months here.
Yeah, we're going to watch that closely. And I think we have to look at the timing of the report. We continue to drill down on those numbers in relation to what Bobby was talking about healthy corporate America. And so at this point in time, we would tell you remain calm and let's keep moving forward and stay focused on the facts. There's a lot of negative news out there, and that negative news will cause people to panic. We don't want to panic here at Five Plan Partners. That's not our role. And we are managing our clients' money in relation to their financial blueprints, as well as looking at both fundamental and technical analysis and economic data like we've discussed today. We're going to continue to provide that information through these vlogs, in our meetings one-on-one, in the events that we have, also on YouTube, our podcast, Facebook, Twitter, LinkedIn. We're providing a lot of information so that you can see what's actually going on behind the scenes. We are comfortable as we see pullback here. We will keep you updated. If you got any questions, you got any concerns, don't let anxiety kick in. Give us a call. We want to talk to you. We appreciate the fact that you've entrusted us with your financial goals, and we want to communicate every way possible with you. That said, every day we walk into the offices of Five Plan Partners striving to make our clients' lives better, richer, fuller, and hopefully you know that each and every day. Have a great week. We'll keep you informed, and we thank you. Take care.